Well, to help us analyse all those oil stories, I'm now joined by Viktor Katona, lead crude analyst at Kpler. Victor, thanks for joining us. Next week we have the OPEC Plus meeting. How will that disruption in Iraqi-Kurdistan impact on what we hear from them?
I think that the entire Iraqi-Kurdish dispute has very much helped OPEC Plus to navigate the very difficult choices that it was facing mid-March. 2 weeks ago, it would have been a completely different story with prices around $70 per barrel. Right now, what we see effectively is that Brent is very close to 80, effectively the price floor that OPEC Plus wants to see. And there's very little interest in doing anything drastic, brisk moves of sudden production cuts or anything of that sort. So I think it's going to be a fairly friendly atmosphere, an amicable chat of the JMCC, and then nothing will come out of it, and they will just roll over whatever they need to roll over.
Well, what about Russian oil exports, though? Are we seeing the full impact of less Russian oil supply yet?
Not yet. I mean, oil exports as such are holding up to the previous levels seen in January or February, roughly, and Russian product exports are the highest in history this month in March. So the impact is still to be seen. However, based on operational data coming out of Russia, the production cut that was promised is already taking place. Although not to the fullest extent that the Russians promised, so not the 500,000 barrels per day, but the production cut is already there, and it will slowly trickle into the volumes that we see in the markets in April and May. So it's still early to see it, but it's already taken place. And the Russian production cuts are effectively ebbing away the all-time highs and the records that we have seen over the past couple of months.
Victor, there have been some pretty bullish calls on where oil prices might end up in a year's time, including from Goldman Sachs. But they're basically they're based on China and the increase in demand we'll see from China. But it's not that long ago that China said that GDP would only grow by 5% this year, which is the lowest they've ever announced in decades. Are they right to be this optimistic?
I mean, it ultimately depends how optimistic you want to be in life and to what an extent do you want to talk up your own book. Right? Everyone has their own agenda. The investment banks or international organizations included, everyone has their own view. But realistically, the Chinese outlook is a picture when, lower construction rates and low housing sales are offsetting the growth coming from consumption. Because, for instance, jet fuel is feeling remarkable in China. People are flying, borders are open. But houses are not being built, and you have the inevitable offsetting and the counteracting of different factors, which will inevitably lead to growth not being that spectacular. The growth is there, but it's not a clear sort of across the board, a lifting tide rising all boats kind of growth. It has impediments, and we need to acknowledge that they will be there throughout 2023. Lower growth, economic growth, also means a lower demand in general for the things that are less being talked about, construction being one of the most important sectors.
The biggest player, though, is still the US. The biggest consumer is still the US. Where do you see US demand going?
I think that US demand will suffer. I think the US is in a situation where it's flirting with economic recession. And the oil industry is feeling it, not necessarily with its own wallet. The profits are still very good. The cracks are good across the spectrum. But the actual consumption levels are nowhere near where they should be. So the US ultimately has a choice. It either exports the incremental crude that it produces and the incremental product that it has that the domestic market doesn't really need any longer, or it will have to shut capacity. We think that the export scenario is much more likely. Effectively, the domestic market is suffering, but the US can find a market outlet for its produce, be it crude or be it diesel, elsewhere.
Viktor Katona from Kpler, many thanks for that analysis.